Hi subscribers and welcome back to the channel. My name's Dominic, CEO and founder here at Cameron James. Today we're going to be discussing the US-UK tax treaty and whether your 25% PCLS is tax-free in the United States. Okay, we deal with a lot of clients in America, as you'll be able to see from our website. Now, something that comes up over and over again is an ongoing discussion with clients as to whether or not their PCLS is 25%, whether that 25% is tax-free in the US or not. So just to give a little bit of background here, PCLS is your pension commencement lump sum from your UK pension. The UK government has put in line rules to say that you can have the first 25% of your UK pension tax-free at your age of retirement, which is currently 55 and will be changing to age 57 from 2028. To get technical, if you're inside a final salary scheme, this NRA or normal retirement age will either be 60 or 65. That is one of the reasons many people complete a pension transfer. There's many videos about it on the channel, but we're not quite discussing that here. So if you have transferred your pension or you're accessing your pension from the United States, many of our clients assume that the 25% PCLS will be tax-free in the United States. Now, again, it's very important to note that we are not tax advisors here at Cameron James, and we will never write you a tax letter giving you advice. We'll always advise you to seek independent tax advice along with our financial advice. We're financial advisors, not tax advisors. However, if you've read the UK-US tax treaty as many times as I have, and also some people in our team who are previous accountants in the United Kingdom, it's pretty clear that it's not as black and white as that. Anybody who thinks they can just draw down the 25% tax-free from their UK pension in the United States and pay absolutely no tax on that and not have to at least fill in some paperwork, I think you're going to be in for a little bit of a surprise, and it could potentially be something later in life where you get called out on this. So we have to think about this rationally. You're an English person or whatever, you have a UK pension, you now live in the United States. You're the same as everyone else there. In the United States, they don't get a 25% tax-free allowance from their US pensions. So why would the US allow you to come to their country and have a better pension and tax program than their own citizens? Doesn't really make sense. And this is where the debate begins. There's many financial advisory firms out there. If you go and type in what you look for on the internet, you'll find it. If you go and type in 25% is tax-free in the United States, you'll find 10 to 15 financial advisors who tell you, yeah, no problem, it's tax-free. But whatever, they're not a tax advisor, they're not qualified to give you tax advice. You should always seek independent tax advice. We have a lot of clients in New York who work in banking, who we could say are pretty sophisticated when it comes to their finances and pretty sophisticated when it comes to researching topics. Very often they come through to us and they say, Dominic, Jonathan, Jude, James, any of the advisors in the team, don't even bother talking to me about the PCLS 25%. I've already done my research and I already know it's very complicated, and I will be discussing this independently with my tax advisor. On the other side of the equation, we get some people who come in who perhaps don't have such a good financial background, and they say, Dominic, I read online that it's 25% tax-free and I'm happy with that. At the end of the day, it's not my business. What they withdraw from their pension and where they pay the tax is not my responsibility, but we prefer to be open and honest with our clients that we don't think it will be as easy as just having that money 25% completely tax-free. At a minimum, you will have to fill in some forms with your tax advisor to ensure that you have sort of taken advantage of the tax treaty between the UK and the US. But if you read through the tax treaty at the bottom, they added one paragraph or one sentence which basically says everything on top is superseded by this one sentence. I'm not going to go into details of the tax treaty here because I've read it enough times, but you should go and read it for yourselves. It's available on the internet. So my advice would always be assume the 25% is not going to be tax-free. Discuss this with your independent tax advisor in your state of residence. It's no point saying, oh, my friend in Miami, my friend in New York. You need to talk to your own independent tax advisor. And as we all know, tax in the United States is super complicated. So you should always have a tax advisor. I hope that qualifies things a little bit for people, and it obviously still leaves a little bit of area for you to research with your tax advisor, but we just think this is the most fair and transparent way to discuss this with clients. It's very easy for us to sit and say, oh yeah, it's tax-free, because it will encourage people to do transfers. We've actually had some clients where they've stopped the transfer because we've said that to them, and then it's taken maybe another 3, 6, 9 months after they've done their research, In the end, they have transferred the pension, but at least we have been honest with them from the beginning. So I hope that's helpful, guys. If you have any questions, feel free to message me directly in the comment sections below, or head over to our website to book yourself in for a free consultation with one of our senior financial advisors. Thank you very much, guys, and speak soon.